McDonald's has been hit by its first fall in global sales since the start of the pandemic in 2020.
McDonald's, the iconic fast food giant known for its golden arches and Big Macs, has just made an announcement that's left everyone stunned. From revolutionary changes in their menu to surprising shifts in their business strategy, McDonald's is shaking things up in ways we've never seen before. But what's behind these drastic moves? And what does it mean for the future of the fast food industry? Grab your fries and settle in, because this is one video you won't want to miss. Let's get started.
We are better set up than most in terms of being able to continue to operate in what is certainly a very trying time.
In a move that has caught everyone by surprise, McDonald's has reported a significant drop in sales, the first decline since 2020. This news is especially alarming given the economic context we're dealing with. With rising inflation and a tighter consumer budget, McDonald's is struggling to maintain its foothold. Let's break down what this means for the fast food chain and the broader economic landscape. According to Bloomberg, McDonald's sales have experienced a troubling decline, falling by 1% over the past year. At first glance, this might seem like a minor drop, but when we dive deeper, the situation reveals a much more significant issue. The Consumer Price Index, which measures inflation across a wide range of goods and services, is currently hovering around 3%. This inflation rate is a critical factor in assessing real sales performance. To understand the impact on McDonald's, we need to adjust their sales figures for inflation. When you account for the 3% inflation rate, McDonald's sales figures actually show a 4% decline in real terms. This adjusted figure represents a substantial hit for a company of McDonald's magnitude. In simple terms, despite nominal sales seeming to be relatively stable, the real purchasing power of those sales has decreased. For a global leader like McDonald's, a 4% drop in adjusted sales is more than just a number. It's indicative of a broader problem. The decline highlights how rising costs are outpacing consumer spending. McDonald's, known for its robust sales performance and consistent growth, is now facing a challenging environment where inflation is squeezing both consumer budgets and company revenues. Is McDonald's adapting to changing consumer habits and economic pressures? Financial analysts are closely monitoring these developments, noting that McDonald's ability to pass on rising costs to consumers without losing market share is being tested. Historically, McDonald's has been adept at managing such pressures through strategic pricing and operational efficiencies. However, the current environment is testing these strategies like never before. Analysts are concerned that if this trend continues, it could lead to more severe long-term consequences for the company's profitability and market position. Adding to the complexity, McDonald's faces stiff competition from other fast food and quick-service restaurants that are also dealing with inflationary pressures. Competitors are aggressively pursuing market share with promotions and value meals, which only heightens the challenge for McDonald's to maintain its customer base. This competitive pressure further exacerbates the difficulty of navigating through these turbulent financial waters. On a global scale, McDonald's operates in numerous markets, each with its own economic conditions and inflation rates. While some regions are seeing modest growth, others are experiencing more severe economic difficulties. The overall effect is a mixed performance across different markets, complicating McDonald's strategy to achieve consistent global growth. How is McDonald's addressing the diverse economic challenges across its global markets? In response to these challenges, McDonald's is exploring several strategies to boost sales and adapt to the changing economic environment. The company is investing in digital transformation, enhancing its delivery services, and experimenting with new menu items to attract more customers. However, these measures come with their own set of risks and uncertainties. The effectiveness of these strategies in reversing the current sales decline remains to be seen. As we continue to watch McDonald's navigate these turbulent times, it's clear that the company faces a complex interplay of economic and competitive challenges. The situation is a significant indicator of broader economic trends and consumer behavior shifts. For McDonald's and other major corporations, adapting to these changes will be crucial in maintaining their market positions and achieving future growth. What makes this even more interesting is that McDonald's recently launched a $5 meal deal aimed at enticing budget-conscious consumers. Yet despite this effort, foot traffic has decreased. Consumers are not only feeling the pinch, but are also opting out of even the cheapest meals. So what's driving this trend? The drop in sales isn't merely a result of McDonald's pricing strategy or the quality of its food. The real issue here is the decline in consumer incomes and the reduction in hours worked. Workers simply have less money to spend, which is reflected in McDonald's sales figures. The fast food giant is seeing fewer customers, and even those who do visit are not spending as much. What's happening behind closed doors at McDonald's corporate headquarters? McDonald's has been trying to adapt by focusing on value deals and expanding its menu offerings, such as their popular chicken lineup and loyalty programs. But these measures aren't enough to counteract the significant drop in sales. Consumers are increasingly scrutinizing their spending, leading to a dramatic shift in dining habits. Returning to McDonald's, it's clear that the fast food industry isn't isolated from the broader economic issues we're facing. As the consumer price index rises, companies like McDonald's are seeing a lag in their sales figures. This is particularly concerning because it highlights a bigger problem. Consumers are struggling to keep up with inflation. Looking at historical data, we see patterns where wage growth slows down and inflation follows suit. For instance, during the late 1990s and early 2000s, both wages and inflation saw similar trends. The global financial crisis further demonstrated how wage deceleration often precedes broader economic downturns. Now, we're witnessing a similar scenario unfolding at McDonald's. On another front, the Biden administration is gearing up for a potential clash with former President Trump over economic policies. Treasury Secretary Janet Yellen recently countered Trump's arguments regarding the impact of a strong dollar on U.S. manufacturing. Trump claims that a strong dollar undermines American manufacturing by making U.S. exports more expensive and less competitive.
Week, I've had the opportunity to make progress on issues that matter to Americans. I've had productive, direct, and extensive meetings over 4 days in Guangzhou and Beijing with China's economic leadership.
Yellen's perspective is that a strong dollar, while it may discourage exports, needs to be assessed in a broader context. She argues that the strong dollar reflects a robust economy, supported by high foreign capital inflows due to the Federal Reserve's interest rate policies. However, the evidence shows that a strong dollar often leads to decreased manufacturing activity and jobs moving overseas. Historical data supports Trump's argument to an extent. When the dollar strengthens, manufacturing compensation tends to decrease, signaling a shift in jobs away from the U.S. This trend is evident from the data showing the nominal broad U.S. dollar index against total compensation of manufacturing employees. As the dollar's value increases, wages and hours worked in the manufacturing sector decline. Speaking of manufacturing, let's turn our attention to Texas, one of the biggest states in the U.S. The Dallas Fed's report reveals that manufacturing activity in Texas is flat, with new orders dropping significantly. The situation in Texas highlights a broader issue: weakening demand due to lower oil prices and other economic pressures. Oil prices have a substantial impact on Texas's manufacturing sector. When oil prices drop, as they have recently, the demand for manufacturing in Texas also falls. This is a concerning sign, as continued declines in oil prices could push Texas into a deeper recession sooner than expected. Despite some optimism about hiring, the reality is that workers in Texas are seeing shorter work weeks and reduced hours. Companies are struggling with decreased credit availability, which limits their ability to purchase raw materials and expand operations. This cycle of reduced demand and declining credit is a recipe for economic trouble. In response to their declining sales, McDonald's is exploring several new initiatives. One notable effort is the introduction of technology-driven solutions to enhance customer experience. They're investing heavily in AI and automation to streamline operations and improve efficiency. For example, McDonald's is testing AI-powered chatbots for faster order processing and personalized customer interactions. However, the success of these innovations is still uncertain. While these technological advancements have the potential to reduce operational costs and attract tech-savvy customers, they also face significant hurdles. Implementing such technology requires substantial upfront investment and can lead to increased complexity in managing tech and human resources. Additionally, there's a risk that customers might find the impersonal nature of AI interactions off-putting. Another significant trend affecting McDonald's is the rise of health-conscious eating. Consumers are becoming more aware of their dietary choices and are shifting towards healthier alternatives. This shift is leading to a decline in the consumption of traditional fast food items and an increase in demand for plant-based and organic options. McDonald's has begun to address this trend by adding healthier menu items and promoting their sustainability efforts. But it remains to be seen if these changes will be enough to reverse its declining sales. Moreover, McDonald's faces increasing competition from fast casual chains and delivery-only restaurants that are capturing a larger share of the market. These competitors are often perceived as offering fresher, higher-quality food at comparable or even lower prices. McDonald's will need to not only innovate, but also strengthen its competitive strategy to fend off these challengers. How is McDonald's planning to reclaim its market dominance? Amidst all this economic turmoil, there's a glimmer of hope in the form of our sponsor, Reliance Global Group. Their innovative approach to insurance distribution and strong performance in recent quarters make them a compelling option for investors. Remember to check out the NASDAQ symbol R and explore the potential returns they offer. Reliance Global Group is leveraging state-of-the-art technology to transform the insurance industry. They are focusing on organic growth, strategic acquisitions, and building a vast agency partner network. This positions them well in a multi-billion-dollar market dominated by larger players. Their recent growth and the anticipated acquisition of Spencer Associates are set to double their annual revenues and significantly boost their earnings. Looking at their stock performance, Reliance Global Group is showing promising signs. With a potential 10% return based on recent trading patterns, this is an opportunity you don't want to miss. However, as always, make sure to do your own research before making any investment decisions. Thanks for tuning in. If you found this video insightful, make sure to hit that like button and subscribe for more updates on the latest news and trends. We'd love to hear your thoughts on McDonald's recent announcement and the broader economic implications. Do you think McDonald's new strategies will help them recover, or will they continue to face challenges in this economic climate? Let us know in the comments below.